Good morning and welcome. This is NDTV Profit. You're watching Ask Profit and my name is Alex Mathew. Like the name of the show suggests, this show is geared towards getting you answers to all of your stock-related questions. And if you've got them, you should send them to us on that number that you see flashing on your screen right now. Now let's take a look at where the markets are before we delve into some of the questions that you've sent us already. And you have the Nifty 50 that's trading with gains of about 0.2%, and it's a far cry from where we began today's session. In fact, we've bounced quite nicely from the low point of the day and are trading at just shy of 25,300. This is also the case in the broader markets. You have the mid-cap index that's trading in the green or just about flat, and you have the small-cap index that's also recovered from the low point of the day. Narrow gains, to say the very least, but it is heartening to see that we've bounced from the low point of the day. And one aspect that will give you a perspective of how this has changed, how the texture has changed, is the advanced decline ratio. So take a look at how that has changed in just the first half of today's session. Let's pull up the advanced decline ratio, and there you go. You have now more advances than you have declines on the screen. Where we started out the session was a very wide gulf between the advances and the declines. Let's also talk about the sectoral performers, and you see one or two that really stand out. IT as a pack is doing incredibly well today and is at the top of the list. You also have the PSU banking pack that is doing reasonably well. And you have banking, the banking index. You saw the chart earlier on play out. We've bounced quite nicely from the low point of the day and recovered quite sharply. Underperforming today and all through the week so far is the real estate pack. And let's pull up the realty index. If we can, let's pull up the weekly chart for the realty index. And what you'll see is that the index as a whole has declined by as much as 8% or thereabouts in the week so far, 7% or thereabouts in the week so far. And that's quite telling, because some of the buoyancy that you saw in the residential space, there's a little bit of question marks about that. You've seen quite a few stocks that are FII focused or foreign institutional investor focused that have seen selling. And it is heartening to see that some of them are seeing a little bit of respite. I would like to pull up HDFC Bank just to give you an indication of what I'm talking about. It is trading in the green as we speak right now. Just barely, but at least there is a respite in the selling. Now, there have been quite a few business updates that have come through over the course of the day and in fact yesterday, and it's quite interesting to focus in on Bajaj Finance. That's what we've chosen today at the start, because on the face of it the numbers seemed quite good, but if you delve a little deeper and if you look at the trajectory over the past several quarters, then you may be in for a little bit of a rude surprise. And Harsh pointed this out earlier on in the session, or in fact before the start of trade today. He's joining in to tell you why the picture is not necessarily the best right now. Harsh, we've bounced of course from the low point of the day for Bajaj Finance, but it's still underperforming, down about 1%. It was down 3% at one point. So what you said at the start was actually something that a lot of traders and investors paid attention to. Why is the numbers not so good?
Well, Alex, while the growth is 5.6% right at the outset, if you look at and you zoom out a little bit, maybe the last 8 to 9 quarters, this is the slowest sequential growth that we've seen from Bajaj Finance. And this is at a time when RBI has actually lifted all their embargoes on all their products. So despite that, we've seen a slightly tepid growth. That being said, Bajaj Finance has guided for a 26 to 28% growth in any case for FY25. They are well on course for that because they did 7.1% in Q1 FY25, and H2 generally is a slightly stronger quarter for Bajaj Finance, Q1 and H2, especially Q3, because it's a seasonally strong quarter. So with the festive demand coming through, likely you'll see better pickup in growth, but we need to also wait and watch as to how asset quality is really shaping up. That's one. Second, with regard to growth, if they were to clock a 28% in FY25 full year, they need to grow Q3 and Q4 at 6.3% sequential, which is doable at least at the moment. But that being said, cannot take away from the fact that Q2 was a softer quarter than what most analysts were expecting. You also had the housing finance subsidiary of Bajaj Finance, which is Bajaj Housing, now listed, which also did just about 5.6% in terms of growth, which is very slow given the kind of trajectory of growth that it has seen in the past. So all of those factors combined, it's a soft quarter from a growth perspective. Focus now shifts to asset quality.
Fair point. Thanks so much, Harsh, for laying that out for us. And it's the perfect opportunity for me to bring on the experts for the day. We've got Sameer Dalal of Natvarlal and Sons Stockbrokers, as well as Rajat Bose, who's a SEBI-registered research analyst. Thank you so much, gentlemen, for taking the time. Happy Friday to you. Sameer, I'll come to you on Bajaj Finance. We've laid it out in terms of the quarterly performance. What do you think about it? Are you also in the camp that says that you're a little disappointed at the trajectory?
Well, you can be a little disappointed at the trajectory, but you also got to look at the base is also growing. So when you look at it optically, I mean, percentage-wise, you don't see the numbers as positive. But given the higher base, look, they're growing at a relatively strong pace. They have some of the best reach. They have managed their credit asset quality, probably the best in the space and the best in the business for the last so many years, and which is why they've got their premium valuations. So valuations have corrected over the last many years. Growth, of course, will start tapering down, and we've seen this in the past happening. If you go back maybe 15 to 18 years, we'll see that similar kind of trajectory with HDFC Bank, where 30% growth started tapering down to 20%, and 20% became the new norm. So I think that is something that we can expect with the Bajaj Finance as the book size keeps growing. Would I be too disappointed? No, I'm not too disappointed on the numbers. Valuation comfort still not totally there, but it's far better than it was about 3 years ago. Corrections would be buying opportunities. At the moment, though, I think the focus should be more on what's happening internationally on the geopolitical front, and that will determine the stock price than what is actually happening with the numbers of the company.
Okay, that's a fair point. So would it be a fresh buy, or would you hold on to this if you have it? What's the call?
So I would definitely hold on to it if I have it. Look, like I said, the downside now is limited given the valuations have come off. Would I go out and buy it right away? Probably not. I still wait for a correction. But if you're already holding it from lower levels, why sell it and rebuy it and have the risk of it probably not correcting if something doesn't go terribly wrong internationally? So I'll hold on. But fresh buys, I would definitely like to say wait a little before you buy.
All right, that's the call. Hold is the call on Bajaj Finance on the fundamentals. We've got the first question. And by the way, if you've tuned in for the first time, I would like to tell you to please tell us your name and where you're tuning in from. It'll help you identify when we take your question. The first one is from Annam Vijay Kumar, who's writing in from Hyderabad, and he's asking about Borosil Renewable. And this one's for you, Rajat, on the charts, because he's bought at levels of 553. He's asking whether to retain this or to sell, because he's losing a little bit of ground. I think he's bought very close, not necessarily close to the high point, but certainly at elevated levels.
Borosil Renewables, at least in today's session, what it is showing is a hammer line. And after it has been falling, say, for the last more than 10 trading sessions. So, and also this is the area currently, 450 to about 475 is its support zone. So immediately, I wouldn't say that you get out of it right now, but if it fails to take out 500 decisively, then definitely one should get out of it. So the reason being, Borosil Renewables is showing distribution. It is not consolidation. It is distribution. So at higher levels, expect selling again. If buying power is so great and that it can take out 500 to about 510, then there would be a fresh up move and we can hope for. But otherwise, it's a sell on rallies, but not at current levels. Current level you hold unless it falls below, say, 465.
Fair point. I'm coming back to you on Hudco. This is a question coming in from Pankaj, and Pankaj is bought at levels of 281. The stock is currently trading at 227 or thereabouts, and he's wondering what he should do from the perspective of the next 6 months. He's got 5,000 shares, Rajat.
I would say definitely it is a hold for now because Putco is testing its 200 exponential moving average for the first time. Probably in this year, it is for the first time testing it, and that is happening only in the last two sessions that it is testing the 200 exponential moving average. That being the case, I would say I'm expecting at least some kind of a rebound, and where you can expect it to go up to maximum excursion as of now, it should be something like 200. Fails to take out 260 going forward in this recovery move, any recovery that happens, then you exit. Otherwise, hold for some time. If it falls below 210, then also you exit.
Rajan has got the next question, Rajan Iyer, and he's asking about South Indian Bank. The stock is currently trading at 24 or thereabouts, and he's sitting on a decent profit. He's bought at levels of 14, so that's quite the acquisition point. He's got a view for the next, or rather he's seeking a view for the next 3 years, so it's not a very short time frame. Samir, on the fundamentals, would you suggest that this is something you can hold on to?
Definitely. I think this is something he can hold on to given the fact that he's bought it at very attractive levels. Look, the bank is still trading at under book value. It's one of the few private sector banks trading like that. The reason it's trading like that is they've already done a large part of the process of changing the entire underwriting skills. I mean, not skills, but the underwriting rules and methods that they have. And about 65% of the book is now the new underwriting rules, where 35% is still the old one, which will slowly run off. And because of which, the growth, if you see, is a bit tepid for them. They're growing anywhere between 10 to 13, 14% on a year-on-year on their loan disbursements, right? That is kind of not something that you want from a very small bank who has a small base. You want that to be higher. But till that old loan book gets written off, I think the growth rates will be lower. The bank is back in profitability. The NPAs have started coming off. In fact, they're off quite a bit. You will continue to see that trajectory, and where we will see is the profitability will continue to increase as the new book scales up to a larger and larger extent. So we believe the long-term prospects for the next 3 years are good. Since the person has bought it at a lower level, he can definitely hold on. Is it the top pick in the banking space? Probably not, no.
Okay, let's pull up JK Paper next, and let's see what it's trading. It's trading up quite considerably today. It's up as much as 5.5%. It's trading at 488 or thereabouts. And we've got a viewer, Shivani, who's tuned in from Mumbai, and she's bought at slightly elevated levels, 575. So she's yet to, recover her buy price. Samir, on the fundamentals, would you hold on to this? She's not mentioned a time frame, so I'm assuming that she can hold for the long term.
Sadly, we don't have any coverage on the paper sector altogether, so none of them is what I can comment.
Okay, that's fair. Rajat, on the technicals, can you provide some perspective?
Yeah, actually, it has come down from the top of about 625 or so. And this has been falling since July. Now, over the last 1.5, showing some kind of a sideways movement in which the 200-day was tested only once. And today, I see a breakout. And that breakout is above the 50-day moving average. Suppose she were to buy a press, then definitely it's a buy call. She wants to average, she can do this. But then if you are averaging now, your stop loss should be below 429. That is the level for any stop loss. What is the expectation on the upside? If it crosses 500 decisively, then you can expect at least a rebound to something like 540 to about 550.
Okay, all right. So recovering your buy prices might be a little challenging, but as Rajat has pointed out, perhaps you can look at averaging. Let's talk about Dabur. In fact, it was the stock that we chose to focus on yesterday, if I'm not mistaken, Samir, because the business update was not very positive. I believe that there is a transition happening in the way that it sells its products. Dabur is now moving to certain other channels, and so therefore inventory is a little bit of a concern this time around in the second quarter, if I remember what my researchers said correctly. Gaurav from Mumbai is asking for advice about this stock. Would you buy at this juncture?
So if he's already bought, he can probably hold on. Would I recommend a buy right away? Good. Look, probably not. I'll tell you why. When a company is going through certain changes in their business model, or when sales are actually showing a bit of a downward trajectory, which is the case which Dabur has reported, it could take a little bit longer, or it could be a structural problem. Now, given that situation, I wouldn't be in a rush right away. It would take at least another quarter for them to probably show that they've been able to make the shift of the business model. So I would not buy it right away, but if you're holding it, you can probably hold on, because I don't think it was that negative. Yes, there was a downtick, but we believe the rural segment and the FMCG space is expected to rebound. So hopefully Dabur, the management is a decent management, would be able to turn around their fortunes. But I would like to see that before I go out and buy. So I'd say hold, but not a fresh buy.
Fair point. All right. Hold but not a fresh buy is a call on Dabur. Atul Pillai's got a question on IOCL, and for a 1 month time frame, he's bought 3,000 shares at a price of 179. The stock is trading very close to that at 170 or thereabouts, but it has been under tremendous pressure all of this week. Rajat, this is on account of the uncertainty on crude prices, I would think. Not really sure about what the technical indicators are. What would you suggest that you should do from the perspective of 1 month?
In 1 month, a lot depends on what happens in the West Asia conflict. But otherwise, what I would like to say here is this: despite this problem, IOC as a stock, it is not going beyond its Bollinger Band boundaries. Bollinger Band is a 2 standard deviation from the 20-day moving average. So it is still in a range-bound situation, and today's movement is that of a hammer line. This hammer line indicates that there is likely to be a bounce back. This maybe that is today is the first day, and there is every possibility that it may actually move to something like 175 to 180. If it fails to take out 180 decisively, then one can think of an exit. Otherwise, stay put. Your stop loss should be the day's low. I think the day's low is around 161, if I'm not mistaken. I think it is 165, right? In that case, 165 should be your stop loss.
Okay, 165 is the stop loss on IOC, but as Rajat has pointed out, do keep a close eye on any developments that you can read about from West Asia. Let's talk about Vishakha's question, and this is in the telecom space. Samir, I don't know how closely you're tracking Vodafone Idea. It is viewer favorite. We've got Vishakha, who's bought already at a price of 16.26. The stock is currently trading at 10 rupees. She's one of those that has gotten in at higher levels. She's got 1,700 shares of this particular counter. Would you suggest an averaging at this point? What are the factors that would have to work in favor of Vodafone Idea for her to recover her price and for the stock to do well?
Okay, so let's take the question the way it's been asked, that what would it take? It would take the government intervention to reverse the AGR dues, which the Supreme Court has said that no, they will have to be paid, even though there may be a calculation mistake, right? So the government could probably come up with some sort of amendment to the bill or whatever, which would allow certain relief to Vodafone, Bharti and the likes. Barring which, look, my big problem with Vodafone is 2 factors. One, they're losing market share, right? That is never a good situation for any company who's trying to make a turnaround. For them to be able to return to profitability, they not only need to gain market share, but they need to gain market share at a higher price, which is obviously not happening because competitors are taking away some of it. Second, the equity has been diluted so significantly over the last many years. For them to raise money to service their equity, they need to make significant profits. Like the ROE and is for them to deliver ROE of 13-14% is going to be a huge mammoth task, which is going to require a lot of effort and it's going to take a lot of time, even if it ever happens. So for me, I would sell the stock. I don't see too much upside in the near term. I mean, look, there is volatility. There's a lot of interest now. If the government comes with the AGR review, then obviously the situation changes. But if I were to look at it purely on the fundamentals, I would avoid it, sell it, and find something better to invest in. To be very frank, book your loss and get out, because even though it may bounce up, I mean, fundamentally, justification doesn't explain why I should buy it.
Yeah, that's a fair point. All right, and thank you so much for that very clear view on Vodafone Idea. PFC, I'm coming back to you on Power Finance Corporation of India, and this is a question from Manoj from Bengaluru. He's asking whether it can be bought at the current juncture for the long term. Could we also pull up the year-to-date chart for PFC? I just want to showcase how fast this stock has gained. It's up about 22% in the year so far. What would you say, Samir, buying at 467 or thereabouts?
So, Alex, let's go back a little further. Let's look at 2 years, and you'll see the run-up has been far more significant, right?
Yes.
It's run up almost $100 plus. Anyways, having said that, look, PFC valuations are not challenging. Growth is not a challenge, because at the end of the day, there is a huge amount of capex that is going to be required for setting up the entire renewable energy capacity, which is expected to be put up over the next many years. Of course, you also have thermal power plants, and there's always talk of a few further nuclear power plants. So funding for the electricity sector is always going to be a requirement. PFC, REC are the two nodal agencies from the government which kind of cater to that. But having said that, they are not the only people that do it. Banks also lend to the power sector, and that is something that the banks will also keep focusing on. But given the fact that they are very focused on this business and the growth opportunities there, I'm sure they'll be able to get their market share. Like I said earlier in my statement, that valuations are not challenging. If you look at PFC, I think it's trading at about 1.4 times book and about 10 times or 9 times earnings, which is quite attractive. There are other government NBFCs like IRFC or HUDCO, which we discussed earlier, which are trading at much higher valuation multiples on a much smaller kind of scale. So I think PFC probably could look at an attractive buying opportunity from a longer term perspective. I'm not saying in the near term. I think there could still be a 6 months to 1 year sideways movement. But from a 2 to 3 year perspective, I think a person could expect a CAGR return of anywhere between 12 to 20%, which is relatively decent given where the markets lie.
Fair point. All right, that's a view on PFC. Let's talk about Rain Industries, and this one's for you, Rajat. Sorry to keep you waiting. This is a question coming in from Ram Mohan, who's writing in from Coimbatore in Tamil Nadu. He's bought at levels of 229.13, holding 700 shares. He's wondering what to do. Should he sell, hold, or average?
I wouldn't say average, but continue to hold on, because it is again on the weekly chart, and today being Friday, that's an advantage for me, because the weekly chart is fully panned out, even for the current week. It shows typical sideways movement, and that sideways movement has been happening over the last couple of years. I would say that it isn't going above 200, or it isn't falling below, say, 140 generally. So now that it is at 174, 175, I would suggest you hold on, put a stop loss below 140 on closing price basis. On the upside, once it takes out 220, there could be further upside. Because normally in such situations, what I have seen, that there is a movement on the upside, and it tries to rescale the peak that it made years back. Maybe in 2021, it made a peak of around 260. It could reach there.
Fair point. Quick answer on this one, and then we'll head into the rapid fire segment. Mitu from Gwalior is asking about PG InvIT. It's basically the Infrastructure Investment Trust. Samir, a view on this one? He's bought at levels of 93, 1,000 units. From a 2 year perspective, I would think, for a longer term perspective, would you hold on to this? People generally buy into InvITs for the regular income distribution.
So I think one can buy into this at this point of time. 2 reasons. One, of course, you get your regular income. 2, if we are in a situation where interest rates are going down, if you lock yourself in at these higher returns, at the end of the day, PG InvIT will also move up in value capital appreciation, because the returns you generate will be more than what the debt rates will be maybe 1 year, 1.5 to 2 years down the line. So you could get capital appreciation apart from your regular income. So I would say, yes, this is a decent time to get into InvITs.
It's time, gentlemen, to hit the rapid fire segment. You are familiar with this, so I'm going to launch straight into it. Do answer as many as you can in as short a time frame as possible. We've got 2 minutes. The first one is on KSB Limited, and we've got a question from Sambasiva, who's bought at levels of 999. He's asking whether he can book loss and buy something like a Kirloskar oil engine. This is a long-term perspective. Samir, any view on this?
No view on KSP, sorry.
Okay. Rajat, any view on the charts?
The gentleman is holding this. One should exit.
Okay, exit. Adani Power is a question coming from Dipesh. He's bought at levels of 38.92. It seems incorrect. That's not the price that you bought it at. But assuming that he's bought at lower levels, Samir, would you hold on from the perspective of 5 years?
Yes, I think one can hold on to anything in the power sector. We believe the next 3 to 5 years will be really good for the power space.
Okay, disclaimer, this is NDTV Profit, owned by NDTV Group and part of the Adani Group. Shiv's question is next. BCL Industries is the name of the counter. He's bought at an average price of 60.83. He's looking for a long-term perspective. Any view, Samir, on this one?
Sorry, again, no view on this one.
Okay, Rajat, view on the charts? BCL Industries.
PCL Industries hold this stock with a stop below 50.
Okay, Chennai Petro. This is Sudarshan from Noida who's asking. He's bought at levels of 890. Can it be accumulated on dips? Rajat, any view on the charts?
Yes, just a sec.
Sure.
Well, one can continue to hold on because it is not showing that much weakness. I would say put a stop loss below 900 and continue to hold on. Currently, it is ruling at 947. If it were to go above 1,000, then you will see further upside happening, and it could be 1,100 to about 1,200.
Yeah.
Overall, the long-term trend is good.
Last, very quick question. Buy, sell or hold? Cochin Shipyard on the fundamentals at this juncture. Samir from Dilraj.
Sell.
Sell. All right. On that note, gentlemen, thank you so much for joining in, for answering all the questions that you did answer, and a particularly engaging rapid fire round as well. Happy Friday to the both of you, and indeed, happy Friday to everybody tuning in. We'll be back at the start of next week to take more of your questions. In the meanwhile, I hope that everything that we discussed on today's program has been useful to you. Do stay tuned. This is NDTV Profit.